Hello and welcome. Today is the 5th day of July 2017. I'm going to go over the silver chart soon. My name is Derek. But first, a couple of sports wagers that I have placed. The most recent one just an hour or so ago. Wagering this fellow here, Aaron Judge of the New York Yankees, to win the American League Most Valuable Player. Today against the Blue Jays, 2 for 4 with an intentional walk and his 29th home run of the season, hitting around 331. A phenomenal rookie season. Is he the next Babe Ruth? I mean, this guy is phenomenal, to say the least. His number is actually 99, although you can his number is 99. So is he the next Wayne Gretzky? I got the negative 300 odds, or I'm risking 3 to win 1 profit. It's almost like taking a stock at 100. If he wins MVP, it goes to 133. If he doesn't, it goes to nothing. As long as he doesn't get injured, I think it's almost a lock that this phenom will capture the prize. After the conclusion of the previous Super Bowl, I put a wager at 50 to 1 odds for these Tennessee Titans, led by Marcus Mariota, to win the Super Bowl. As crazy as that sounds, don't be surprised if they are one of the powerhouse teams that will be competing with the New England Patriots and all the other top teams in the National Football League this year. I think at 50 to 1 odds, you're getting tremendous value. It's probably about a 20 to 1 shot, I think, as far as real odds are concerned. And this is a team I think could do very, very well this year. And I would bet on this team, the Toronto Maple Leafs, in hockey this year to win the Stanley Cup, but the betting odds are just terrible on them, or they're giving them credit. It's around 15, 16, 20 to 1 for them to win, and I'd want at least 25 to 1. But they've got some young, good talent led by Austin Matthews, Mitch Marner, William Nylander, adding in some veteran leadership and one of the best coaches. And these are merely just investments or gambles. And here are a few examples. Gold and silver, the crypto world, sports wagering. I'm giving you future examples of such. Poker, the stock market, the Powerball lottery, bonds, and it's simply holding dollars. That's gambling. You're gambling that the ultimate net investments will not outperform it or will not go down, basically. I mean, you're also gambling that that's not going to lose its value or get inflated out of control. Within gas prices, this is just one example. Maybe it's around $4. It's been $2 before. And just on a Google search for gas prices, Tom Shell has arm, leg, and firstborn cash or credit, and it's a credit-based monetary system, of course. Now, before getting into these silver charts, and a lot of the silver charts I'm going to show in Canadian dollars, I'm going to show the cross of US and Canada. And if you're not Canadian, I think this is a very important chart. At least as I look at longer-term time frames, it paints a very interesting pattern. It's in a technical aspect right now where it's holding in within a few days at this previous resistance level after it followed a nice little break, a nice little pump to the upside. After this move, correction here, move, correction here, move, obviously extended from the band, and a pullback or sideways waiting time for this to correct could very easily come in play. But like I state, on the more longer term time frame, it paints a more interesting picture. This monthly time frame, which spans back pretty much from the start of the millennium, when we look at when things start and stop within its up and down moves, we can see that this rally started in the early part, roughly in 2003, which is when silver got going. This top occurred in 2007, and that was moments before the big 2008 crisis, which is shown here. This is when gold and silver went up. Down in here, gold and silver also went down. And then from 2009 to 2011, gold and silver had a beautiful rally. This is the 2011 top in here. This is when the Canadian dollar had a higher face value than the US one, or everything above this line. And it's been in this decline now for quite some time, down to these 2015 lows at a little over 2/3 in value. As far as its chart pattern is concerned, since this thing rolled over, and we can see the rolling over occurred in here, first test of resistance, go away, I'm going lower. Second one, you almost made it to this line. Well, close, but no, we're throwing you down again. Second, this time it has basically spent the better part of a year and a half within this sideways consolidation and a decent sized green candle following one from before. There was a decent one here. And you notice what happens with the big red candle after it. So this is going to be an interesting month of July to see if it can hold this rally, and holding it is really staying well above here and even furthermore extending it maybe to this previous high. Because when this thing gets going, this could again mean gold and silver prices ready to lift off. Of course, short term, they ain't looking too good. Let's go to the silver chart. And here we have prices at $16.07 American, which is very, very low prices. Prices right at these lows in here, and barely above or back in this area of the 2017 lows. We could also see, as far as chart pattern recognition is concerned, that within a down move like this, you have a move to the upper part of the band. And like I stated with the last video, when you have a big red candle after the decent green, not good. Not good. And that was the case in here. Two green candles up here, big red candle down, which was then followed by this sideways wedgie thing in here. So no decent up move from that point. Because when you have the situation, when you have a bullish point like that Canadian dollar, the one that I was showing you, if you can hold after a move like this, when you get here, that's why I'm talking about holding in here, that's where you get bullish optimism. But if you don't, and then you see leaving of this band after this kind of pattern, no surprise that not only was this level of support not there, but that you'd have an easy test to this level. You're there now. It's already pierced below. And you can now be talking, as we have been, or I've been anyway, about having a test of this low. Now let's show you the daily chart on the Canadian currency. And because of the strength of the Canadian dollar versus the US dollar recently on its market, this is taking a much bigger hit. Now at levels not seen, well, at least on this time frame, that today is the lowest it's been, as it has obviously taken out this support level that the American price action is, well, it's up at the upper end of it now. And when it left its 18 average of lows, and rather than that of highs, you can see pulling in here, break of this support straight down, moving. Well, you can see like 21 and high change, that it was going down, and it was going to go down good probably because of the pattern. And then you knew even better, like around 21 and a half. Here it stands at 20.80. So there's a few percent of the lower prices that have come into play. It's overextended to the downside. It also means that this level in here, which was support on any, what would be decent rallies now, would be something you would look for a resistance point. And of course, this very steep declining 18 average. It's got to get tested at some point, whether it be through a price move up or a few days going sideways. Switching into the weekly time frame, and it left its 18 average band roughly around here after it, well, from this high, we can see how obvious that is. But for what it's worth, back down to this level of support, which means that this level here would be resistance on this time frame if, of course, it's going to stop going down. But if it doesn't stop going down, well, then we're going to start talking about these lower areas. And how I like to talk about up and down moves oftentimes is Fibonacci upside or downside. For upside, what I'm looking for, and we're not calculating that, I'm looking for a market to go up, have a good price correction, and then I take the high divided by the low to the root of 1.1 or 1.618, multiply that by the low. Now I have a calculator to do that for me, but that's the formula. And for a downside calculation, which is again what we're looking for here, is a down move, which is this, that has a price correction which is up to here. So then I take high divided by the low, and I put this to the root of negative 0.618, and I multiply the low again. So I've already done the calculation. The low is 20.98, the high is 24.79. The downside calculation is about 19 Canadian dollars. So roughly in around this low area here is the price objection that technically this says it should be going to. And the upcoming, well, you'd think, how many periods is it going to take? Anywhere from 1 to 8? 1 to 8-ish or so. So we're talking within the next couple months. And who knows how quick it'll take. Because if this area is not support, expect a fast move in here. 8 means, okay, little bit of move up here, and then it's going to do this over, again, an 8-period time frame or around there. I'm just giving a guesstimatization of it. And finally, the last chart, which would be the monthly time frame. And price action came back. And I'll actually put the American one on as after this, because I only got data back to here anyway. But the price action here so far has held the small consolidation of the late 2009-2010 resistance level, as well as stay above the 2008 high in which it had. And that can't be said the same for the US chart, which I'll go to soon, but the overall movement of this market is completely sideways. It has been for several years, sort of like I mentioned with the Canadian dollar cross. Let's put that one up, then the silver one up in US dollars. And here we have it. So again, it was going down throughout this entire time frame on the currency level, and things are starting to change, and up moves also means the price of silver would be more competitive or closer to the US dollar number again. But the price in US dollars for silver on its monthly chart, and within this one, this is the previous high and the resistance level of 2010 and into 11. And with the Canadian one holding above it, right now it is resisting within the area. And when I'm showing this, this is all nonsense when you consider one currency versus the other. This fiat currency is all about this, and that fiat currency is all about that. Well, silver is all about what it states. When you have a physical silver round bar, however it might be, it's 99% silver unless you have some sort of other form, but you actually have the real physical silver itself, whether it was mined in Mexico, United States, Canada, Australia, or in Europe or anywhere else. Silver is just that of silver. This has been an entire mechanism of price manipulation movements, and it ain't stopping anywhere in the near short term. But things are going into interesting directions now as we move in further into this debt-based monetary system. And with all that being stated, and me showing that just the whole Canadian dollar chart showing it looked like it might be breaking out, that as I've been stating for a few weeks now, that I think this thing is going to be ready to pick up and take off pretty soon and start a secular bull market. A secular bull market is something like that, something that makes tremendous highs, riding above the 18 average on this band, several green candles, a few corrections here and there, of course, along the way. That's the type of market movement I'm expecting to start sometime in the near term. I would think by this fall. I mean, I don't know when it would start, but as these prices drop, especially if Bitcoin prices increase, that creates, for me, I think, very tremendously awesome opportunities to be able to pick more ounces than I would have thought otherwise would have been the case. So that is my view on the situation, and I hope I can help out in any ways within information that you are looking for within this video. And thank you for tuning in, and have yourself a great day. Bye-bye.